Coins Kid Crew, it's Phomophobe, and I'm going to wrap up the markets for the year. It's been a crazy 2022, and we're going to be back next year, and we're going to, even in this bear market, we're going to continue to make money. And yeah, I just want to wish everybody a Merry Christmas, Happy New Year, and just ensure that you take some time off from trading and, you know, go spend some time with your family and do all those normal things that we should be doing. Starting off with Bitcoin, having a look at the weekly chart here. Look, the FOMC minutes, sorry, not the minutes, it was the announcement and the follow-up press conference from Jerome Powell was extremely hawkish. You know, we were rallying up until the CPI data and also the press conference, and it was just the perfect time to take profits off the table because, you know, Jerome Powell came out extremely hawkish. I don't think he was a fan, or he wasn't too fond of the rally that we were having in risk assets, and it was surprising to me that we didn't sell off on the day. It literally happened, you know, 24 hours later, which is bizarre if you ask me, because markets tend to be forward thinking. But yeah, after the market digested the press conference and the remarks from Powell, risk assets have been selling off, and I think this continues until at least mid-January, until we get back to some sort of normality, because at the moment, you know, it's vacation time, markets are extremely thin, and yeah, there's no point trading, guys, unless you're in a short position and just holding it. I wouldn't really be trying to trade the volatility, because there won't be. It'll just be, unfortunately, probably more downside. So I mean, if you want to position yourself for that, you can, but I recommend just taking some time out from markets. But if you're a degen, you definitely want to be short right now with, you know, obviously low leverage. I advocate 3x leverage max. If you take more leverage, then that's at your own risk, but I don't recommend it. But anyway, enough of all that. Let's look into the charts here. Now, I'm looking at Bitcoin on the weekly here. I have to apologize, I'm on a laptop from 2016, and it runs a bit slow, but it's okay, we'll work with it. So, measuring Fibonacci levels from the top of 69 down to this June low of 17,622. You know, the rally was extremely weak. We didn't even get up into this golden pocket here, which is, you know, this 200 EMA was the resistance level here. We met that right here, and we've sold off ever since. And now this 21 EMA has been basically the resistance level that has kept price action drifting lower. And if we look at the latest candle, now I was calling a rally from here, if you guys remember, because I was expecting us to breach this 8 MA here, which we've done. Now we've got 2 days and 21 hours to go until the end of this candle, so this could reverse and become negative. There's plenty of time for that to happen. We just need to get down to 17,100, and this will form a very bearish looking candle. And if we look down here at the bottom of the Keltner channel, we're looking down here at 13,677, and that's in line with quite a few predictions for 14k Bitcoin. Now, worst case scenario, we've got these Fibonacci levels here. 1.272 at 12,156, the 1.414 at 10,000, and the golden ratio at 7,580. We cannot rule out those targets being met. Now, you have to keep in mind this is a weekly chart, so we're not going to get there overnight. This could take, a couple of months, possibly even longer, to basically come to fruition. And if you look at this Keltner channel here, it's still in a downtrend, so weekly chart, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It could take 3 to 4 months to reach this golden ratio if we do reach that. But I kind of feel there's going to be a lot of buying pressure around this level here, because this 1.272 lines up with this previous resistance level here. So I would definitely be buying some Bitcoin at this level here, for sure. That's where I would start to dollar cost average into a position. And that means dollar cost averaging and buying Bitcoin and sending it to a cold wallet. I'm not leaving it on a bloody exchange. That's just, everybody should have learned by now, you do not keep crypto on an exchange, straight up. But anyway, that's the bear case for Bitcoin. Now, I can't really see us rallying based on the whole macro environment right now. So I'm about 80% sure we head lower. There's that small possibility that we go up, but I just can't see it happening. The Fed doesn't want it to happen, and they've signaled to the market they're going to keep raising rates, and we are not at the end of the tightening cycle. So this is going to reflect in assets or asset prices. So that's the unfortunate picture. Now, for me, I kind of see it as a blessing. I mean, why would you want crypto to be more expensive? We're getting cheaper prices. This is why you keep dry powder. You keep a lot of dry powder on the side so you can take advantage of these opportunities which will present. So going over to Ether, it's the same situation with Ether as well. Look, measuring from the top here to the trough here at 880 back in June, we rallied up to the 0.5 level here. Perfect textbook Fibonacci, this was the impulse move. This was the retracement up into the golden pocket, and now we're heading down. And yeah, we could go a lot lower with Ether. And what would be the catalyst for Ether going down to these levels here? 552, 433. Well, if Ether gets basically called a security, which there is a high probability that it could happen, then you could see Ether tank to those levels there. For example, if XRP loses the case and it gets deemed a security, then there's a higher probability Ether is going to be deemed a security as well. So there's your, black swan event that could cause Ether to head down to these levels here at 552, 433. Don't think we'll see 305, but you can't rule it out. But I think here for Ether would be a great opportunity to buy. And this could happen within the first 3 months of next year. Very high probability. So we're going to have to see what happens with the XRP case, because that's going to set a precedent for Ether. Heading over to total market cap. As you can see here, downtrend is still in place. If we lose this swing low here at 727 billion, then we could drop down to a touch under 500 billion for the entire crypto market. or even down here at the 1.414. So yeah, that's a pretty depressing scenario if you are long crypto. But for someone like me who has been just trading crypto and hasn't actually been hodling it, it's going to present an absolutely amazing opportunity. So I'm waiting for that level. Now, if I'm wrong and we start to reverse here and we build a base around this level here and then start to move up, then I'll have to change my opinion. But I mean, if I'm buying down here and it starts to go up, and I'm still getting a good opportunity. So yeah, right now it's just a patience game for me. Just holding and just waiting to pounce on these levels here if they do present. Now heading over to Quant, I think Quant has a lot more downside left in it. You know, you've got this potential shoulder, head, shoulder forming, and yeah, I think we revisit. I think we revisit these levels here at around 70 to 80. So yeah, that's just my opinion for QNT. Yeah, it's been bid up quite a bit this year, so there is a lot of room for a downside move. Had a little pump here because we had this descending wedge, and that's played out nicely for a long, which I took. But yeah, now I'm feeling a bit bearish here because we've caught this resistance here along the 50 EMA and the 100 EMA here on the daily. If we zoom on to the 5-day, sorry, zoom out to the 5-day, yeah, we can see here we caught resistance on the 50 EMA and a 21 EMA dual resistance levels. So, and this candle looks like it's about to turn negative on the 5-day. We've got 20 hours to go, so yeah, I'll be watching that carefully. Yeah, so the descending wedge has played out, but now the macro is taking over. So yeah, I think QNT is going lower, and if you check out a few other quant analysis out there like Louis Crypto and Step, they're saying the same thing as me. So as you can see here, we had this little pump up to the 0.618. We've found resistance nearly exactly at that level there. So yeah, that's going to be heading a lot lower. Link on the weekly, still extremely bearish. Yeah, if we break this $5.30 level, heading down to $3. So $3 link could be on the table in the next 3 months. Now Link is an absolutely incredible project, so I definitely recommend, if we get down to that level, to pick up some Link, because that's definitely got a future. So ADA, yeah, I mean, it's already broken the 1 here, and it's just been in this extremely depressing downtrend, and this is going to continue probably to 25 cents, possibly even lower. It could get down to 19 cents, 13 cents. And that would probably mark the end of the bear market for crypto if we get down to those levels. I think you'll see a spike low, then a spike pump, and then maybe a retrace back lower and just build a base. That's what I think is going to happen. It's not going to be like spike low and go straight up. That doesn't happen. It's going to be spike low, recovery, find resistance here, build a base. And this could play out for a long time. So Polkadot still is in this parallel channel. And yeah, we're at a critical level here right now at $5.21. If that breaks, we're heading down to about $2.60 for Polkadot. It's another project that I believe in and definitely has a future. So yep, if we get down to those levels, definitely want to pick some DOT up. Heading over to the Dixie. Now the Dixie looks like it's finding support here along the 100 EMA on the 3-day. We're definitely due for a bounce here. So I do think we eventually rebound here and then attack this golden pocket area here. So we'll probably see another rally up to about 110 possibly. We could make a double top here, could go back up to about 115, but yeah, I like longs on the dollar here up into the golden pocket. On the NASDAQ, as you can see, this candle looks very bearish, and if we lose this 10,431 level, could head down to a touch below 9,000. Got a nice little bear cross here on the stochastic on the weekly. So yeah, this has been a rally since, this rally has been going on since early October, and I think it's come to an end. That's your Christmas rally. Alright, at XRP, no sorry, this is gold. Since I think the dollar's going up, I think gold's going to come down, and we should revisit this. Wait, this is the 8-hour chart, so let's zoom out a bit more. Alright, so yeah, look at this. This is basically found resistance here at the 0.5 perfectly. So looks like we're heading down here for gold, probably back down to this 1614 level, and we'll see what that happens. This is the 300 EMA here, so that's interesting. Look how we found support right on that 300 EMA. I think we head back down to it for gold, and yeah, silver as well on the 5 days had an absolutely incredible rally since September actually. No one's talking about that. No one's talked about this rally in silver, but there it is. That's an incredible gain. But yeah, we're topping out here, I think, at the 0.236. So yeah, I think we head lower for silver in line with gold, and heading over to the 2-year US Treasury yield. Now let me bring up a better chart than this. Let's go into the weekly. Look, it's not really, well, it's still in a bull market. Bonds are selling off, so bonds aren't actually in a bull market, but the yield is going up. So yeah, look, I think depending on what the Federal Reserve wants to do, I mean, they're basically in control of this market. So yeah, right now we're at 4.246. Man, like, it's going to be interesting to see where this goes in the new year, depending on, I guess, the CPI reports that come out. So yeah, this could head up to about 6% max, I think. Any more than 6 potentially could crash the whole system. So yeah, right now, I mean, there's an argument to say that we're close to topping out here, you know, because it's kind of like, it's going to be really hard to say, because these yields present a very good income opportunity for hedge funds and, you know, retirement funds. So there's going to be a bit of demand at these levels here. Like, I myself have put some of my retirement funds into government bonds because they're paying a great yield and they're the safest investment that you can invest in. So yeah, I think we possibly just maybe, well, if we look at the 10-year bond, this is probably going to give us a more accurate picture. So we're at 3.477, so we could possibly revisit this 4.33 level here one more time. But I think we sort of top out around this level here between 4.33 and 5% on the 10-year. Any more than that, it's just it's really bad for the system. But yeah, I just like the yields that they present here on long-term treasury yields. I think it's a lot of value here now. So, you know, a lot of these funds are going to be investing in government bonds for diversification and for safety. So yeah, I don't think we get up to 6%. I mean, there's always a possibility we could get a spike high up there, but it wouldn't stay there for long. So, and as you can see here on the stochastic, we're starting to form a bull cross here. So yeah, it looks like we're going to get one more spike in yields, and that's probably going to happen in the new year. So yeah, if those yields go up, it's going to be very negative for the crypto market. Now I'm going to wrap that up. I'm going to wish everybody a Merry Christmas and a Happy New Year. Hope you enjoyed the TA. Sorry about the voice, sorry about the sound, but I'm in Colombia. I'm here on a dodgy laptop doing my thing. So yeah, we'll keep in touch, guys, and we'll see you guys in the new year. Peace.